Hello everyone, and welcome back to our channel. If you're new here, make sure to hit that subscribe button and turn on notifications so you never miss an update. Today, we're diving into a highly anticipated topic, the dollar price forecast in Egypt for 2025. Will the Egyptian pound continue to struggle against the US dollar, or are we headed for a period of stability and recovery? Let's find out together. Over the past few years, the exchange rate of the Egyptian pound has fluctuated significantly. But what does the future hold? Is 2025 going to bring relief, or should we brace for more challenges? Before we dive into predictions for 2025, let's take a quick look at where we stand today. Currently, the Egyptian pound is hovering around 50.80 Egyptian pounds to $1 after a series of adjustments over the past few years. The currency has faced a lot of pressure due to inflation, global economic instability, and domestic challenges like high debt levels and political factors. Despite efforts from the Central Bank of Egypt and government reforms, the exchange rate has remained volatile. But what factors are likely to shape the future value of the Egyptian pound? Let's break it down. To understand the outlook for 2025, we need to examine several factors that play a role in determining the dollar's value against the Egyptian pound. 1. Inflation trends. Inflation has been one of the main drivers behind the currency's depreciation. If inflation continues to rise, we might see further pressure on the pound. The cost of goods, from food to fuel, is closely tied to inflation, and that affects the value of the currency. 2. Foreign reserves and national debt. Egypt's foreign reserves play a crucial role in stabilizing the pound. The higher the reserves, the more the government can manage fluctuations in the exchange rate. However, if foreign debt continues to rise, it could limit the central bank's ability to defend the pound, leading to further devaluation. 3. Global economic conditions. Global economic factors such as commodity prices, oil prices, and the strength of the US dollar will also play a key role. If the US dollar strengthens globally, it could push up the exchange rate against the pound. 4th, government and IMF economic reforms. One of the main tools the government has been using to stabilize the economy is its IMF-backed economic reforms. These reforms aim to tackle inflation, reduce debt. Some experts predict that the Egyptian pound could continue to weaken over the next few years due to the pressure from inflation, high debt levels, and the global economic environment. If the current trends continue, it's possible that the dollar could reach 65 Egyptian pounds by 2025. However, other analysts are more optimistic. They argue that if Egypt successfully implements its economic reforms, attracts more foreign investment, and manages to stabilize inflation, the pound could stabilize or even recover. So, the 65 Egyptian pound mark is not a certainty, but it's certainly one of the potential scenarios. Let's not forget the important role that the Central Bank of Egypt plays in all of this. The central bank has been actively intervening in the market to manage the exchange rate and control inflation. Recently, the central bank has raised interest rates to curb inflation and attract foreign investment. These measures can have a short-term impact on the exchange rate, but their long-term success will depend on how effectively they can stabilize the economy and reduce inflation. So what does this all mean for ordinary Egyptians and businesses operating in Egypt? Well, for the average Egyptian, a weaker pound means higher import prices, which in turn leads to higher costs of living. Food prices, fuel, and other essentials may become more expensive if the dollar continues to rise. This could also result in reduced purchasing power for Egyptian families. On the flip side, a stronger pound would make imports cheaper, reduce inflation, and improve the standard of living. It would also make Egyptian exports more competitive on the global stage, benefiting if you have savings, Consider diversifying them into foreign currencies or assets like gold or real estate to hedge against currency risk. 2. Stay informed. Keep an eye on economic indicators like inflation rates, government policies, and global market trends that could affect the exchange rate. 3. Plan your budget wisely. In times of currency fluctuations, it's crucial to manage your spending carefully. Try to adjust your budget to accommodate potential price hikes in imported goods. Don't forget to like this video if you found it useful, share it with your friends, and subscribe for more updates on Egypt's economy and financial forecasts. See you in the next video.